Hey there, traders. What's going on? Jamie Saettele here. It is July 7th, 2016. Welcome to the Midweek SB Strategy webinar, although it is Thursday, so it's more towards the end of the week strategy webinar. Want to go over, to start, US dollar. So I'd written a post on, I guess it was on Tuesday, about, we had a US dollar post in, on Monday and Tuesday's updates actually. But the thing I was looking at as far as the dollar, the FXCM Dow Jones Dollar Index was a triangle, okay? And that we'd get a pullback and then we'd go to new highs. So that's kind of, I'm still feeling the same way as far as going higher, but the market did not really pull back before going. It went to a new high and then pulled back. So, it's a little, the wave count, I guess, is not as clean as one would like, but, real life markets aren't textbooks. So, the idea is the same. I mean, the low we were looking for was actually 11,985, and today's low is actually 11,985. So we have the right support here heading into NFPs, and really what you've got is the dollar at, I should say, the risk on this move looks to be like acceleration higher, okay, for the dollar, with focus on really, 12,150, which is just above the year open at 12,139. Okay, so that is where my focus is on the dollar, is higher. Now, that said, the dollar, there have been very different. The dollar's been doing kind of its own thing, right, across the board. So you've got, pound getting slaughtered across the board, obviously. Euro's just absolutely dead. Yen's been strong. Dollar yen's been really weak. Aussie is strong until seemingly today, and it reversed. And here we are slipping under support as I speak. And then Kiwi was weak until last night, and then just went nuts on the upside. So, it's and now dollar CAD is firming up. So everything is really kind of all over the place. But generally speaking, it does look like the dollar is wants to break to the upside. And crude oil, as I'm speaking, crude oil just took out the lows hard. And here you go. This is what I'm talking about. Okay, so this is just in this move, literally, that's the last five. I started the webinar here, and crude oil just fell that 5-minute bar. Okay, so crude oil is absolutely in the driver's seat here and taking, kind of anti-dollar trade, right? Taking the dollar higher as crude oil tanks. And this is actually a pretty big level. We just broke 3 lows that we had made in the last 2 weeks. We were $3 higher just this morning. So, this is a major it's a major move you're talking about. So this is pretty significant. The breakdown here really has a measured move target down towards 41.40, and I get that. I'll go to the daily chart. If you take the measurement here, you get 41.12 actually. And that, just below inflection points from this high in March back here. So Does look like that's where crude is headed. Again, do want to see a daily close down here. And these markets are so schizo that you could end up with, I guess, a false move and a close back above here. But given the fact that this was a low 3 times, to me, I'm thinking that you probably end up, making good on this. Okay, 4th time's a charm type of deal, and the market ends up heading down to 41. So we will consider this, I guess, when I move on to talking about dollar CAD. Looking at the U.S. dollar, though, I mean, that index is kind of, to me, I think it's probably one of the simpler, easier short-term charts. I mean, just extreme rip higher. Obviously, this was all Brexit, right? But then the gap higher and sideways, for 2 weeks, it sets the stage for basically another run higher. Okay, it's that simple. So that's what we're looking at as far as the dollar is concerned. And again, if it's going to try to fail at some point over the next few weeks, then it probably tries to do so up in this region, 12.139, 12.150. Okay, so that's what we're looking at as far as that's concerned. As far as the U.S. dollar index, the Dow Jones FXCM dollar index. As far as the ICE dollar index, you could pay attention to 97.07, 2 equal legs up, and then the trend line that extends off the highs from December and in January. But this index is not nearly as clean to me, as far as the short-term picture is concerned. But the idea is the same: rally and then little sideways kind of pennant, if you will. Risk of a move up towards this resistance area. But the thing I like about the U.S. dollar, the FXCM index, is the fact that you've got the year open at 12.139, the measurement of the recent range, 12.152, and you've got the high from last April at 12.163. So, all those things line up very well, and kind of gives you a really big zone to aim for. And then if the market starts to do something up there, it could be an area where you actually do potentially try to reverse. Okay, but let's move on. Going through basically the majors, as I often like to do with these webinars. You've got, euro. There's not, it's done jack for a while. I think the move is lower, right, towards 10. I think the 106 area, right? We talked about that. I think you can see it better on the dailies. So we've got all this slope stuff down there, right? We've got the line that connects the March low. We've got the line that March and December lows, and there's intersection with some longer term downward sloping stuff. You've got the 618 or 1618, extension of the decline from the May high, right? So that's taking this leg to the high for pre-Brexit, taking 618 of that and subtracting it from the low over here, and you get 105.87. I still think that's where this is headed. If you remember, after Brexit, our strategy all along has been to basically get short into 112.30 because that was a 618. And you also had some other stuff up there. 2 weeks have passed here, right? It's 2 weeks to the day have passed actually since Brexit, and we have yet to get up to that level, which is why just 2 days ago talked about the outside day and basically wanting to be short at that point. So we've put some entry orders in over the last 2 days to short at the week open and just below. Has yet to be hit. Look, NFP's tomorrow, so Sorry guys, I lost audio there. Anyway, I should be back. If we wanted to go real short term, like here's a 15-minute chart, right? And from the peak that we have back on, I guess that was Tuesday, at 111.86. Okay, you've got an impulse lower, 1, 2, right, 3, 4, 5. Yesterday's decline, right, stopped just, almost spot on the post-Brexit level, which is the high volume level, which is at 110.31. That level's been support now. Sorry about that, guys. Computer's terrible. I came in this morning and we were trading right up here. I thought this was A, B, and then we were going to go for the C wave, and it would have had the ideal short, to trigger up at 111.35 or so. Has yet to happen, as the market looked like it wanted to go and then just came off. So, I don't know. Maybe it goes straight lower from here. Either way, it's the short side favored probably until about 106. As long as you're below the lows that we, made just this week. All right. So that's it. That's euro. There's literally absolutely no difference in the analysis from, last week, and except for just really short term, really short term stuff, right? Trying to pinpoint the entry, thinking it might be 11.23 or whatever. So that is that. Dollar Swiss. Moving on there. Let's see here. I want to see some of them. What just happened? It's like the market just went nuts right when I start my webinar, although that does seem to happen. Huh. All right. Dollar Swiss. You've got this resistance line in the parallels with it. Not sure if this ends up being something that lasts for that long, but as it is now, the gap's closed. Looks like, again, that it might want to head higher. If it does, dollar Swiss is a level I'd watch for about 98.60. If you fail there and turn over, then maybe whatever the dollar's doing is actually false. Other than that, not a whole lot from my vantage point to look at for dollar Swiss. Pound dollar. Well, it's all the way back down to 28.80. So the opportunistic given the long-term support that pound had come into, and the fact that we had taken out yesterday's high. So anyway, what do we have here? Here's the chart. It doesn't, I like to say if England is like not over, or the UK is not over, I should say, then you'd expect a bounce here. If it doesn't bounce here, I don't really know where it would find any support. Like if we go through this level, then there's literally nothing until I guess 120. That's, what are these lows down here? This is a monthly chart. So lows down here, June of 1985 puts you at 118.80. Again, I can't. There's really nothing else I can say about pound dollar. If it doesn't bounce here, you've got the line. This line goes 1993, 2001. And then, here in 2016, you've got the channel, and these slope lines cross a bunch of internal stuff too, but I got rid of them just because I want the chart to be clear. And then the trend line here crosses through a number of inflection points. So, this is a longer term chart. So it's possible that we, probe lows, probe into lower levels, and then end up closing higher on the month, right? But I mean, from a trading perspective, you can't possibly just sit here and just be long and pray that the market, without a stop or something. I mean, if you do get a complete breakdown, then your trading is basically over at that point. So, it would not be a surprise to see something like that, but again, you do have to have a hard stop. Other than that, there's not much else to add on the pound. What was written yesterday, of course, in combination with this super long-term stuff. Oh, also 786 retracement. Forgot about that. The 786 retracement of the move from the 1985 low to the 2007 high is also 127.97, which of course is just a few ticks right now from the low. And then, as mentioned, you want to see yesterday's post to see the, the extreme volatility, et cetera, that we've got. We've only seen 3 times in history. What we call WVF, the Williams VIX fix, basically gives you an indicator or a VIX reading for any asset. It's a simple calculation. The calculation is in yesterday's post. The only times we've seen that was during the financial crisis, and you got some pretty crazy short squeezes there, on the order of 152 to 160, over 166. And the next one, under 145 up to 155. So, I mean, you're talking, significant short squeezes here. And then the only other time, again, you have to use the closed data because closed data pre-1998 is all I have. And before then, you got 1992. So this was Black Wednesday, Soros, right? And then the crash, and then the short squeeze, and then it continued lower. It's kind of like the midpoint of the move. So, I don't pretend to know that what pound, if it's going to hold up, for a very long while, or if we get a short squeeze and then it just continues lower. I do know that the conditions present are those which, have basically occurred before you get really big short squeezes, right? And the fact that we also had come off long-term support, to me, is a pretty good combination for an attempt at the long side. And that is that. Aussie. Very Jekyll and Hyde-ish, right? So Brexit rebounded, held the lows on the subsequent rebound, was looking good. We actually were able to buy the spike down last week, continued higher. Election uncertainty over the weekend, gap down, closed it, dropped off yet again, but held support again. Okay, rallied today into last night. Then you had the downgrade on the outlook from S&P, immediately tanked, but actually held support. We were looking for it to hold. Went back to the highs. You'd think at that point that you're free to go higher, but not to be, as we've come back again. So again, it's just a complete kind of chop fest, if you will. the more that this continues to chop, you get one of two things, and you're either going to have a complete failure, and this thing's going to absolutely plunge, or it's building even more energy for an upside acceleration. I mean, not much you can do. I like Aussie on a long-term basis. Near term, my focus is and has been and will be, unless this gets stopped out, basically the 77 region. Okay, you can see it probably clear on the daily. Yeah, so the 77 area, just you've got two levels here. Well, I guess you could say three things, but you've got daily reversal resistance, weekly reversal resistance, and a whole bunch of slope from like all kinds of different angles. And another reason, if you will, to like this is the seasonality component of it. Aussies, the dollar in general is bearish actually for the next few weeks. So I'm not sure, given the pattern and how it's acting up here, I'm not sure that's going to end up playing out. But Aussie itself is quite bullish for the next 2 weeks into mid-month of July. So, if we were going to get up here, I was kind of looking for it to if we're going to get up there, I'm basically looking for it to happen from now until next Friday, which would be the 15th. So kind of running out of time here to accelerate, 200 or 300, not quite 300 pips. But again, a lot of questions to be answered, obviously, going into NFP. So we'll say either way, this key reversal, stop under there, I think is the way to be in order to keep what could be a good position, or it ends up as a flat nothing position. What else we got? Oh, I also wanted to talk about, and this has to do with Aussie. So, okay. Obviously, so slope analysis, you can do it on any time frame, right? This is a shorter term time frame. This is an hourly chart. But what I had talked about last night, this goes right into kind of, into strategy. And that is, so you get, you identify a slope first, okay? The market is, you don't know if it's right or wrong, but we got a sense over the last number of days that this was actually right because the market kept hitting the levels, right? So, we kind of took a flyer here. Okay, got, into a good position, fine. We're trading around the median line, gapped through the median line, trade up to the 50 line, support back on the lower parallel, and resistance back at the median line. I mean, obviously, with all the touches that you have on these various, associated parallel levels, this is clearly, the correct slope to follow. Well, once the news came out last night about the, downgraded outlook from S&P, Standard & Poor's, what you ended up with was support here. Okay, so when I went to bed, we had basically I sent out that tweet that we'd just come into support, right? The idea being at that time, and what I wrote in yesterday's update, if you can finish up here, right? I mean, preferably you finish the day up there, okay? We finished Europe up there, and then the US session came in and reversed it all. But if you can finish the day up there, what you have at that point would be a raised floor, okay? A raised floor indicating that the trend is strengthening, okay? Because you're finding higher supports. If you're finding higher supports, you expect higher resistance. So if we were to finish up here, what you would do is you would be able to actually increase your trade size. This would be an aggressive way to do it. put your stop under here, and then target. If you said, well, I think there's going to be Brexit, um, that's great, good for you. But you got to remember that the pound actually was trading at yearly highs right before you had the big shock, right? So I mean, literally, much of that move is an hour, and then you get a gap down over the weekend, right? So not something you can necessarily prepare for, or at least from my vantage point or my analysis. All right, so that is just kind of a quick overview of Michael asking about your Aussie. Yeah, sure thing. I actually have that written down, Michael. Your Aussie. I will look. I will look at it, my friend. Um, so yeah, we'll look at that. Okay. So, but I wanted to go through that with you about the whole Aussie thing and what that raised floor business means. All right. Kiwi. So I was pretty surprised last night or this morning to see Kiwi at 72.17. Apparently, the assistant governor or something made a bunch of noise last night about the housing market overheating and whatnot, and so Kiwi took off on the upside. Here's another, you know, reason, if you will, why I think it's best, to, especially because this is if you have a trend entry, you're going with trend, it's one thing. But if you're going with counter trend, it's something completely different. Where I think it's important to, wait until the market gets to a level. In this case, 72, and then you want to see a reversal, and then you can take advantage of that, right? In this case, we don't have obviously any sort of reversal. Okay, the market just went straight through it and has stayed there all day. I mean, even as the dollar strengthened across the board, with Aussie, Euro's not doing a whole lot, but even Euro's down a little bit. Pound was up at 30.50 this morning, and now it's at 28.90. Dollar CAD obviously with the crude oil numbers, but Kiwi is extremely firm. So that, for me, that takes the near-term short idea. It gets rid of it, and I don't really want to screw with that. However, I do want to remember and remind everyone else that you do have this long-term level still here, and we did trade into that and sold off hard. Yes, there was Brexit, but that is where we came into and responded. So as long as you're at this spot, it is a long-term decision point, remains so, and don't be so sure that the market can't fail again. All right, so I would be on the lookout, for new highs potentially that do end up, maybe failing. Okay, you know, if I can show you this weekly pitchfork, right? So the weekly fork, if you remember last week, or last year, last August, you've got the 50 line was support. But you know what? We traded on that line for 1, 2, 3, 4, 5 weeks. 5 weeks until the base broke to the upside. All right. So it was just 2 weeks ago that we hit the 50 line. I don't know, something similar could happen here. The combination to me is long-term resistance. Okay. That's all I am getting at here. So Kiwi is a big spot from several different considerations. You know, you've got this slope as I just showed. You've got the long-term line off the 1985 and 1993 lows. Not to mention you do have a high from 1988. I see some questions here. Let me just hold on for a minute. I want to get through some of the stuff I wanted to kind of cover, and then I'll. Sorry guys about the audio. Wouldn't really say that you missed anything here because there could still be um, some significant upside from any sort of break. I mean, crude oil just broke to these lows. Dollar CAD still within the range. If crude oil is going to go to 41 bucks as the measured move suggests, then you're probably going to get a break higher, and you're going to be up somewhere around 134 in dollar CAD. Okay, so why don't we just go through this really quick? The triangle counts that we've been talking about. As I noticed, this looks like Aussie's hanging on for dear life, trying to at least. Let's take a quick look at the triangle levels in dollar CAD. So let me just get a new chart so it's nice and clean. Okay. So we'll get rid of all this stuff. So what you've got so far in dollar CAD from the May low, okay? And before that, let's point out or remind that we have really big long-term support that we have come off of since the May low, right? Okay, so you've got one leg up, okay? Second leg down, a third leg up, a fourth leg down, and then that's kind of it, right? You could say this is a fifth leg up or this is a fifth leg down. That's where it gets kind of tricky. Okay, obviously the range has tightened and is tightening significantly. So moving into a 4-hour chart, what we've got, and due to basically crude oil just crashing through what should be pretty decent support, it kind of makes me think that what you have here is this. This is larger wave A, smaller wave A, smaller wave B. Question is this C? Right? I'm not too sure about that. all of this from here on is pretty small, okay? As far as triangle legs are concerned, so I'm thinking that you could actually continue to go sideways for a little bit longer. Now, from a trading perspective, okay, I view this low at 28.75 as one to basically use in order to position for a move higher, meaning that I'm bullish dollar CAD above 28.75. All right, and the reason for that, of course, is this chart. Okay, this chart indicates very strong slope on these levels. You have this trend line as well. Just as important, if not more important, is the fact that you do have the month open and the week open under here too. 29.14 is the weekly opening price. I say, if not more important, because again, these levels are purely objective, right? Like, we can decide when to. There is some subjectivity, into obviously drawing any sort of trend line, okay, or even pointing out where support and resistance may be based on highs or lows. The week open and whatnot is completely and utterly objective. There's no ifs, ands, or buts about it. You are above it or below it. So with that said, going into a really short-term chart, like a 5-minute chart, I mean, that's about as impulsive as a move gets, no? With the rally that you had here from 28.75 up to 30.15, which actually itself has been pretty good, resistance at times, right? Just draw a line over what you just hit, and you can see that 30.15 has been, decent resistance at times. Actually, you have a gap over there from 2 weeks ago. So 30.15 over here too in May, the end of May. So what we want to do then is stalk out support. And for me, I'm seeing it probably about, it looks like 29.40s as far as support's concerned. So 29.40s for supports. 29.45 is actually the 50% if you do pull back from here, okay? 29 is the 618, and you'd be targeting the top of the range, okay? Because you don't know if you're going to break out. And again, you do have a divergence right now between crude oil and the Canadian dollar. Crude's broken down. See how it finishes the day. Dollar CAD's still going sideways. But that's the next move. That's the trading move. And there's obviously a good deal of risk heading into tomorrow because you've got NFP and CAD jobs data. So, you're going to see some pretty wild, vicious moves. But that can also give you an opportunity to get into a position, right? A lot of times, how these things work. A lot of times you do get a sharp move in one direction, and the market will then, fade the other direction. Okay. In this case, if that happens, that initial sharp move fades, or happens into 29, 25, 29.40, well, that's your chance, I think, to get into a long position with stops below this level. Okay, because if you take out 28.75, probably would be no support until the next trend line support, which would be down here. Okay, in the 27, 60s or so. So that's dollar CAD, and one that I think you should pay attention to heading into tomorrow. CAD, by the way, Aussie CAD, just a good looking, short-term advanced slope from mid-May. Actually presented this several midweek webinars ago. We're looking at this. So this is a really good slope, as you can see, continuing to make higher highs and higher floors. This is actually a pretty good example of of higher, higher floors and higher ceilings. So, okay, so you find resistance, you come back to support. You find resistance, support here, and then you're expecting to get a higher ceiling than you came from, which is this level, and you do. You go all the way up here. Okay, you'd be targeting the upper parallel because that's the next level. Okay, Aussie CAD can be pretty sloppy on an intraday basis, but it's actually a pretty good example of what we're talking about. Excuse me. All right, so that was dollar CAD. Dollar yen, the only thing excuse me. The only thing for dollar yen that I'm paying attention to right now is you can see it better on the futures chart actually, but here it is the Brexit level. Okay, so the Brexit level, as you can see, it's in red, the high volume, was resistance, support. This is yen futures, and as long as you're above it on yen, you got to be bullish yen or be nothing. Just, what I basically am at this point. And what we're looking at here, if I show you what it looks like on a 60-minute chart on dollar yen. Okay, so here's the Brexit level. It's the close of the hour of Brexit, which is the high volume level for pretty much everything still at this point. And 101.56 on dollar yen. And as you can see, it's support. Okay, support. You broke through, changes things. Bearish. And then it's resistance. Actually didn't get to it on the spot chart. On the futures chart it did. But in order to be bullish dollar yen and try to play any sort of recovery, short squeeze, whatever you want to call it, you need, in my opinion, you need to be above 101.56 to do that. Okay. Otherwise, you're risking. You're not really working with any sort of behavior that would suggest that the market could go higher, right? So that's what I'll look at as far as yen's concerned. Some of the crosses to pay attention to. Michael Martin actually just asked 2 questions about some of these crosses. One was Euro Aussie, one was Euro Pound. Funny enough, these were both crosses that I wanted to go through anyway. So let's take a look. Euro Aussie. Again, if you remember this chart from a bit ago, Euro Aussie on the top, Euro Yen on the bottom. There's a tendency, for whatever reason, whether it be the cycles of time or whatever, for Euro Yen to lead Euro Aussie. Okay, we've been in a consistent downtrend, obviously, in Euro Yen for some time, and Euro Aussie's gone sideways. You could count this as, a triangle with descending kind of nature to it. And then, of course, you've got a trend line we're coming up on that goes all the way back to the 2012 low. And if that breaks, then good night, Euro Aussie. So from this, this is one of the charts that we had. And we actually shorted up here. Remember, we shorted this rally on the So what we have here with Euro Aussie is, I think that, the big level on the downside, where you could actually get a bounce from it, is 145.82. And this line is actually this is the line that goes back to August 2012, right? So this is a longer term support level. And what you end up with is the intersection of that really over the next, couple of trading days at daily reversal support, which is the close of the low day for the entire move, which is 145.82. Okay, that is April 21st. So you're coming into this level where you could bounce, right? So just because it looks like Euro Aussie wants to eventually break to the downside and go to hell, I wouldn't necessarily advocate selling into the support, right? You could bounce around this level, all right? In fact, wouldn't be surprised to see the market try to recover. Now, with Euro Aussie, I'd continue to watch for resistance at this, median line, right? It looks to be up near 150. So, for me, you kind of have two levels to focus on, and that is 150 and, hold on, and 145.82. Now, here is the 4-hour chart, okay? The 4-hour chart for Euro Aussie probably get rid of some of this stuff. Okay, I have a fork going from here, the low here, or high on the 13th, low on the 16th, high on the 24th of May, and cutting through all these levels. All right. Probably not the cleanest. Again, it's a fairly not the cleanest, but it is, a fairly spiky pair, if you will, just like Aussie in general has been. But the gray parallel, upper parallel, which cuts through all these levels up here as resistance, is probably what I'd focus on, okay, over the next several days. So if you do get a recovery here, and the momentum profile on this is pretty weak down here. Again, here's the 45.82, okay, for support. But if you bounce before then, I would be aware of resistance up near 150, okay. This crosses tomorrow and Sunday. So that's where I would focus my attention on Euro Aussie. If you get a pop up there, it's a chance to short into resistance for first a run down into 45.82. All right, before you get a bounce. So essentially, it's the same thing we did back here, short resistance. And then take out on the spike and it went lower. But it's been pretty messy. So that's what I'm looking at on Euro Aussie. Let's go to Euro Pound. Pretty big level to watch coming up. Is 87.43, and that's actually where you have two equal legs from the July low from 2015. So again, you just take the rally from here, add it to the rally pre-Brexit low, as the May low, and you get 87.43. Okay, so that's really where I'd focus my attention. As far as support's concerned, former resistance levels, these slope lines, okay, even this parallel, I'd probably look for it to intersect with something like the month open at 83.30, right? So depending on when or if you get there, that could be towards the very end of the month, or it could be, closer to sometime in the middle of next week. My thinking is that if you get this pound dollar squeeze higher, which I think we get it, I just don't know if we'll survive the stop. But if that happens, then that's what brings, euro pound into a, back into support, former resistance, but becomes support, right? So that's what I'd be looking at. Pretty crazy how well that works, but they all work well in hindsight. Yeah. So that's what you're going to watch for. Basically, the old upper parallel resistance, it was support back here, but you watch for that to become support now, okay? Euro pound, Euro Aussie, another one to take a look at. Gold, look at the gold. Here's the crude chart. Look at gold. So last night I wrote a bit about gold, just that you have, we had the extreme, the trend extreme, right? So let me put that on there. Okay. So to give you an idea, trend extremes, they indicate potential for just like a snapback move. Sometimes you end up getting a bigger lower high, whatever. Like for euro dollar, we've gotten some, trend extremes on the upside. You can see, like you had one here that you would have been murdered. Trend here, you've been murdered. But the trend extremes on the upside actually work out okay. Like August 24th was a top, and May 3rd was a top. That was not really a top in March 30th. But we got on gold, right? So I wrote about that last night. We got one yesterday. The idea being that you could see risk of a pullback before you try to go higher. Okay, and then we ran the stats, and those stats are in last night's update. But just the summary of the stats, real quick, if you didn't read it, is that the maximum drawdown after you get an extreme move like this, and this was just doing the upside, so the test was just to go take a short position on the close of the extreme trend count indicator and then close it in X number of days. Okay, so that you got a sense of what it turns out that all the holding days, periods 1 through 10, over the years were profitable. And over 15 years, I think there were 30-something trades. So it doesn't happen all that often. But the maximum drawdown then for the market, maximum profitable position from a short position, would actually be days 3 and 4. Okay, and 3 through 6 is when it really is, kind of a cluster of good days, if you will. So this would be day 1, day 2 is Friday, day 3 would be Monday, day 4 would be Tuesday. So basically Monday and Tuesday are your days where you're looking for some sort of a low, potentially. Okay, and what I'm thinking is that low, much like euro pound, right, you've broken out of this structure. That doesn't mean it's not useful though, right? What used to be resistance, okay, now is an area that's going to provide support if this is truly a very strong bull market, right? So if you pull back from here, watch for support. In this 13, it looks like 13, 26, 25, 30 area, okay? That's where I think is your best spot for support. So that is gold. I would look for this, dip, if you will, to get into 13.25, 13.30, and then continue higher. With the next levels of interest really are not until you go through this trend line. It's a big deal because you're breaking. This is the trend line that goes all the way back, talking about the 2011 and 2012 highs. Okay, so if you break through this, I think your next level is probably where you get two equal legs from the low, which is all the way up at 1457. Okay, that would actually take you through the August 2013 high. All right. That is gold. We already looked at crude, did we not? Yes, we did. So we have broken 3 days range here. You have basically an ascending or a descending triangle breakdown. Risk for this at this point is towards 41, which would be your measured move. Finally, I want to look at the FTSE. There's some long-term stuff written here on the website over the weekend that I put up. What you've got here, if I do in months, so to me it seems like the FTSE is the most or the best representative, for a long-term wave count for price action since the 1999 high, December of 1999. Okay, it's pretty clean. You've got a leg down, a leg up, a leg down, a leg up, and you turn down. So again, it's just probably a massive fourth wave triangle. Okay, wave 1, wave 2, wave 3, which is, A, B, C, D. Wave E is what we're looking for now to unfold. The implication here from this point is really quite bearish for the next year or so. You would look for basically a low to form probably near the 4,400 region, and we're currently trading 6,500. So do the math, that's a pretty big drop. Okay. And if you look at price action from the high in 2015 in April, you've got this leg lower, 3 waves, leg higher, 3 waves. Probably not quite done. Okay, I think you probably have a little more upside here. For the FTSE, I would be thinking that 66, 65 is 2 equal legs from the lows that you made in February. So that's a level to pay attention to. Slope confluence is actually a little higher. You've got potential Andrews line resistance up here, which would be a bit higher, closer in the 67s would be an area to watch. So obviously a couple reasons to talk about this. One is that, the Brexit deal scenario, whatever, has, thrust the FTSE into the spotlight. And, sometimes as far as the really long-term, uh, you know, um, wave count is, right? Because if you turn down from this region, it's going to give you, and you turn down sharply, it's going to give you more confidence that your long-term wave count, triangle deal is actually the right one, and you're on track. So that's what I'd watch for the FTSE, and maybe I know I've had it up on the charts for God knows how long, seems like forever. But if we end up getting that top in the FTSE, maybe we finally get the damn run to 2,200 so that we can get the top in July in the U.S. stock market. it's been pretty brutal, right? I mean, this is ugly. I mean, this is from last year on to this year. I mean, end of the world, world saved, end of the world saved, right? I think if you can get a move up into 2200, or near there, and put in, let's just say at least a new high. If we can just get a new high and get this over with, then we can, start talking about, finally having some sort of a peak in place. And it would be pretty nice if it happened with the FTSE, coming into the resistance that I just talked about, right? Then maybe we can get some shit cleared up. But again, you got to like the cycles: July 98, July 2007, July 2016. Okay, all tops, 9 years apart, same month. They all, kind of, preceded really significant, global events. I mean, 1998 July, then, in August of 1998, you had the Russian default, which led to the collapse of long-term capital management. Okay, and then in July 2007, you had a top. The next month in August, you had really kind of the first big ripples of the financial crisis, right? That was this decline. So from a trade perspective, if we can get a new high this month, track for that top, especially near 2200, look for some puts, maybe 2 months out or so, to give yourself enough room to catch something big on the downside in August. Just a thought. Okay, that's what I'll be looking to do. Other than that, we'll wrap it up. I will leave you just with, real quick, reminder on the US dollar index. I do think that you kind of, this resolves higher, okay, and that the ultimate decision point on resistance for the US dollar index is going to be 12,140, 12,160 area. Okay. That does not mean that you have to go, though, with NFP. It doesn't mean NFPs are going to come out and the market's just going to go like this. It doesn't mean NFPs come out and the dollar goes whoop, right? NFPs could come out. They could be terrible. And the dollar could go like this, could come right into support and then go higher, right? Or they could come out and be like, and the dollar still goes down into support, then goes higher. Okay, just saying. You've been around, you've seen how markets trade around NFPs. There's a lot of times there's no necessarily consistent reaction. If anything's consistent, it's the strategy that you want to use, which I think is to actually look to fade the initial move. Obviously, barring anything completely crazy, like last month when they had a number that was absolutely terrible, right? It came out at like 38,000 jobs when the market thought there was going to be like 170 or something. Okay. So, if something absolutely crazy happens, either way, you get a print of 500,000 jobs, then yeah, maybe you do go straight up to that level. I'm just saying. But anything in between or close to the consensus, or even within 50,000 of the consensus, typically you get a move one way, which ends up getting faded. Okay, so just keep that in mind. That might be the way to go into this tomorrow for NFPs, is that actually if you look for support on the dollar, maybe on this median line, or maybe just a nick of today's low, and then maybe look to fade it. Okay, so that's what we'll look at heading into NFPs tomorrow. Other than that, I mean, look, I like the pound dollar idea. The long-term support, the analysis is there. I still like Aussie. See if it holds up. And I like dollar CAD if we can get an entry down near 129 25 to 129.45 or so, and I'll leave it at that for now. Okay, all right, so everyone have a great rest of your week and what's left of it, and weekend, and I will get this archived and posted so that you can watch if you want, if you were late, or if you just want to watch it again. And take care. All right.